Hey guys, welcome to this month's stock market recap. I'm Robert Montes with Nexus Wealth Management. Today we're going to be diving into what helped the market, what hurt the market, how it affects your everyday life for the month of October 2025. So guys, the month was positive overall with broad optimism driving gains amid supportive policies and earnings. We saw the S&P finish up 3.5%, the Dow was up 1.9%, and the Nasdaq led the charge with a 5.6% increase, proving once again the markets can regroup and have strong performance even when things feel a little bit bumpy. As far as positive factors last month, there were three things that really stood out. First was the Federal Reserve's rate cut. The Fed had a 25 basis point cut, which eased borrowing costs, and it makes it simpler for families to handle finance purchases, as well as big ticket items like homes or cars to be more affordable. Second, we saw strong corporate earnings. So companies posted better than expected results, especially in tech and consumer sectors. Strong earnings signal job stability and reliable incomes, as well as a growing economy, which definitely is good. Third, we saw easing trade tensions. This was primarily between the United States and China, the trade relations, which have been ongoing. The tariffs has been the big word all year long, but we're seeing that start to stabilize, which helps keep prices in check and support household spending power. Now, on the flip side, there were a few things that we want to pay attention to that were putting some pressure on the market. First was the measured Fed's commentary. Now, we just talked about the rate cuts, but there have been cautious talks about future rate moves, which create a bit of uncertainty. Now, while sentiment is still positive, the Fed is closely monitoring economic movements because we really want to make sure that rate cuts don't inadvertently push us back into an undesirable inflationary situation. Second, the government shutdown. This is the big one, guys. This has been going on for a while now, and surprisingly enough, this ongoing shutdown, the market has been pretty indifferent to it, but it is something we're paying attention to this month as benefits are starting to get cut. And third, we saw some mixed tech earnings. Some big names like Meta, Microsoft, they had uneven results with higher than expected AI spending and revenue shortfalls causing minor pullbacks in sectors, which is noteworthy because these are such big players when we look at any indice, as they are, market weighted, which we're going to talk about in a sec. But guys, as someone who's juggling work, family, my key takeaways: first, pay attention to being consistent with your contributions and your portfolio allocation. A diversified portfolio can help weather market ups and downs. It's also key that you avoid chasing returns or trying to time the market, as this is almost always detrimental to one strategy. Second, if you are indexing through funds like the S&P, the Nasdaq, the Dow, it's important to remember that these are market weighted indices, and oftentimes people think they're much more diversified than what they really are. But guys, where these companies are currently at, the top 10 holdings in the S&P currently make up about 40% of the index, and 9 of those 10 companies are tech-based. So a pullback in tech could really be detrimental to your portfolio if you are not paying attention to it. Guys, if you have any questions, please don't hesitate to reach out. Appreciate you watching. Let me know if I missed anything, and consider leaving a like. It does help. Until next week, guys, thank you so much. Talk to you then.